Good day, everyone. I am Xyzer Zafra of BSA 2A, and I will be representing my group, the Intangibles. So, for today's presentation, I will be discussing to you the Chapter 3 of Intermediate Accounting 2, which is the bonds payable and other concepts. So, without further ado, let's start. So, first, let us define bonds payable. What is bonds payable? Bonds payable are long-term debt instruments similar to notes and loans, except that bonds are usually offered to the public and sold to many investors. A bond is intended to be broken up into various subunits, which can be issued to a variety of investors. Long-term debt instruments, dahil ito ay isang liability, so it is governed by PFRS 9 for financial instrument, or the standards are based on it. Hindi ito yung mismong utang, pero ito ang ginagamit para makapangutang. Similar to notes and loans because it is interest-bearing and has a maturity date. Pero hindi lahat ng notes ay interest-bearing. Since it is offered to the public and it is a contract or debt instrument, a debtor-creditor relationship na mayroong contractual arrangement between the issuer and the bondholder called bond indenture. So next, rights and duties. A bond indenture may specify the rights and duties, the restrictions and requirements. In the rights and duties, call provision is an issuer's right to buy back all part of the issue's bond certificate before the maturity date, while redemption rights on the other hand is the holder's right to redeem the bonds before the maturity date, maaaring dahil inacquire na ng ibang entity or sa lumalaking utang ng issuer. In the restrictions and requirements, 1. Issuer is required to establish sinking fund for the protection of the bondholder. Dahil dito, binabawas ang interest na binabayad for the bondholder. 2. Issuer is required to maintain their financial ratios. 3. Restrictions on dividends available to the issuer's shareholders. An issuer may be required to appropriate a portion of its retained earnings for the protection of the bondholder. 4. Restriction on incurrence of additional obligations. Hindi maaaring mag-issue ng bagong bonds unless hindi pa nasa-settle ang mga naunang bonds, or restricted form issuing new bonds in excess of a percentage of bondable property or fixed assets. 5 is the appointment of independent trustee. And lastly, the authorized amounts of bonds that can be issued. So next is recognition. So, when to recognize the bonds payable? Kailan siya mag-a-appear sa financial statement? So, when the entity becomes the party to the contract or when the transfer of resources transpired. Ibig sabihin, once na napasama ang pangalan niya in the contract or in the agreement. Paano? Kapag nakapirma ka na doon and nakalagay yung pangalan mo doon, or when the transfer of resources transpired, o kapag pinautang ka na that you received the principal amount of money. Yun. Doon na daw yung time na i-recognize mo na si bonds payable. So, paano nga ba siya ipine-present sa financial statement? Siya ipine-present sa liability section, either current or non-current, depende sa date kung kailan ito may settle. So, kung payable within 1 year, it is considered as current. If within a year or more, non-current. Issuance of bonds. So, ayan. Issuance of bonds, ibig sabihin okay na ang kontrata. So, sa part ng corporation, it is a liability. While sa part naman ng bondholders, it's bond investment. Maraming paraan kung paano ini-issue ang bonds. Mayroong through underwriting, auction, or direct placement with investors. So, how does it work? For example, si company ABC is the issuer or the seller. Remember, maaaring government ang issuer at tinatawag itong treasury bonds or government bonds, while corporate bonds naman kung company ang nag-issue. So, si company ABC ang nag-issue ng bonds sa market. Yung bonds, naglalaman siya ng principal amount with the interest and the maturity date. Then the trustee, for example, the bank, sell it to the other investors at a higher price. Maaaring other company, individual, or government ang investors. On the issuance, Company ABC received cash, while investors will be paid in cash plus the interest in return on the maturity date. The interest payment depends if it's serial or term bonds. So ano nga ba yung serial and term bonds? Mamaya ay atin itong pag-uusapan. Is the scheme. So on the issuance of the bonds, there are two schemes, the discount and the premium. So on the discount, the proceeds is less than the face amount dahil mas mataas ang effective rate compare sa nominal rate. Effective rate ay ang rate ng kalakaran sa market, while nominal rate is the stated rate. So kaya naman, the interest expense is greater than the interest paid. On the other hand, ang premium naman ay kabaliktaran ng discount, na kung saan, mas mataas ang matatanggap mo kaysa sa face amount since the stated rate is greater than effective rate. Kung kanina, mas mataas ang effective rate sa nominal rate, dito naman, mas mataas ang nominal rate sa effective rate. Okay? So, ibig sabihin, mas mataas ang nominal rate, mataas din ang interest paid. Nagiging face amount lang ang bonds when the transaction costs are incurred. And kung walang discount or premium in the problem, the effective interest is equal to nominal interest. Thus, nominal rate is equal to effective rate. Next naman is presentation. Paano ipinapresent ang bonds payable? Ito yung ways how to compute the net carrying value for the bond issued, the face amount, discount, and premium. So first one, the face amount. Since equal yung natanggap mo na proceeds at sa kung ano yung nasa agreement, yun na yun. For example, 2 million. 2 million na matik yung kanyang net carrying value. Yun. Next naman natin, discount. Dito, mas mababa yung natanggap mo na proceeds kaysa sa face amount. Okay? So for example, 2 million ang face amount mo and less the discount. For example, gawin nating 400,000. Yan. So therefore, ang net carrying value mo ay 1.6 M or 1.6 million. So lastly, premium. Kung ang natanggap mo naman ay mas malaki sa face amount. So to get the net carrying value, i-add lang natin yung premium sa face amount. Okay? So next is measurement. So what is the initial and subsequent measurement of the bonds? Dito natin may encounter ang mga computations, problems, and so the initial measurement classified as financial liability at amortized cost, meaning fair value minus the transaction cost. Accordingly, the transaction cost or the bond issue cost are deducted when determining the carrying amount of the bonds. Normally, it is equal to the net proceeds from the issuance of the bonds at interest date. Next is subsequent measurement. Amortized cost using the effective interest method. Transaction costs may require an adjustment to the effective interest rate. Dahil ito ay amortized cost, gagamit tayo ng amortization table to find the present value of the bonds. So next, future cash flows times present value factor at interest rate is equals to present value or the principal amount. Yung present value factor, ito ang solusyon niya kung paano siya computin. So, 1 divided by 1 plus the rate raised to n or the number of periods. Yung rate na gagamitin natin pala dito ay ang effective rate dahil yun ang nakalagay sa PFRS 9 or the Standards for Financial Instrument. So then, on the other hand, the annuity present value factor is 1 minus opening close parenthesis 1 plus rate raised to negative number of periods divided by rate. Okay? So, ano yung pinakaiba ng dalawa? Simple lang. Ang PV factor ay ginagamit kapag nagbabayad ka at maturity date. Pero kung nagbabayad ka naman installment like quarterly, annually, semi-annually, yung mga ganyan, yung tipong series ang pagbabayad, tayo ay gumagamit ng annuity present value factor. Okay? So next naman, issuance of bonds between interest payment date. What if the date on the bonds was January 1, but was issued on April 1? How to measure the funds payable between interest payment? Halimbawa, yung nakalagay na date sa bond certificate na ay January 1 ni-release. pero na-issue siya sa bondholder ng April 1, 20x1. So ngayon, mayroong mga nagdaan na buwan na hindi siya na-release or na-issue sa bondholder. Then, yung accrued interest prior to the issuance date is not included in the initial measurement. Hindi siya kasama sa initial measurement. Pero credited siya to interest payable or interest expense. Okay? So then, ang nare-recognize lang na interest expense ay only the post-issuance interest expense. Meaning, yung interest na na-incurred after the issuance date, which is the April 1. Kaya naman, pre-issuance is not recognized as interest expense. Only the post-issuance ang nare-recognize. Okay. Next, types of bonds. These three types of bonds as to maturity: term bonds, serial bonds, and extensible and retractable bonds. Term bonds if it matures on a single date. Serial bonds, on the other hand, kapag ang principal amount ay nagmamature in installments or partially binabayaran na ang principal kasama ng interest. So for example, mayroon kang payable na 600k with 10% interest that is payable within 3 years. So sa first year, 600,000 ang yung principal amount since it's the first payment divided by 3 years. So 200k annually ang yung expected na babayaran. Okay? So for the second year naman, 400,000 na lang ang principal amount dahil nabayaran mo na yung 200,000 last year. Ganon. And for the third and last year, 200,000 na lang ang principal amount since ito na lang yung natitira mong utang plus their annual interest of 10%. Yan, 200,000 plus 60,000 which is the interest, and 200,000 plus 40,000 and so on. Next is extensible and retractable bonds. Retractable bonds. Bonds that have more than one maturity date, permitting investors to choose the maturity dates that meet their needs. Extensible, binibigyan ng right to extend the initial maturity to a later date, while retractable gives right to shorten the initial maturity to an earlier date. Yung zero coupon bonds naman, ang kaibahan lamang ito sa regular bonds ay nagbabayad pa rin ng interest ang issuer sa bondholder at principal on maturity date sa regular bonds. Compare sa zero coupon bond na ang interest at principal ay kasamang binabayaran on maturity date. Next, ang callable bonds. Tinatawag itong callable bonds kapag mayroong call provision or issuer's right to buy back all or part of the bond issue. Number 6, convertible bonds. Basically, ito yung bonds na naiko-convert into shares or into shares of stock na maaaring ipagbili. Next is putable instrument. Is one which the holder has the right to return or put back to the issuer in exchange for cash or another financial asset, or is automatically put back to the issuer upon the occurrence of a specified future event. Example is the death of the holder. So it is classified daw as a financial liability. And some examples of putable financial liabilities are extensible and retractable bonds. And secondly, preference shares with mandatory redemption or redeemable preference shares. So to simplify, example nito is kunyari namatay si bondholder. Maaari niyang ibalik yung bonds through his or her representative. Normally, it is a contractual obligation, which classified as financial liability of the issuer to repurchase or redeem the instrument. Maliban na lamang kung meron itong residual interest in the net assets of the issuing entity. Then kinaklasify dito as an equity instrument. Next, compound instrument is a financial instrument that, from the issuer's perspective, contains both a liability and an equity and components. So, these components are classified and accounted for separately. Examples of compound instrument is convertible bonds. So, from the word compound, meaning two variables or elements that combine together. Okay, so which is the liability and equity component. So therefore, to separate the debt and equity of components of a compound instrument, the entity simply deducts the cash proceeds from issuance of compound instrument less fair value of that component without the equity feature, and it's equals to equity component. Next, retirement of convertible and non-convertible bonds. So dito muna tayo sa convertible. So bond refunding refers to the issuance of new bonds, the proceeds from which are used to retire existing outstanding bonds. So sabi dito, ang bond refunding daw ay tungkol sa issuance o yung parang pagpapalabas ng mga bagong bonds or new bonds na kung saan ang proceeds ay ginagamit upang palitan yung mga naunang bonds or existing bonds na scheduled na sa kanyang maturity date. So usually, ang new bonds daw ay mayroong mas mababang interest kumpara sa mga replaced bonds. Ito ay ginagawa upang mabawasan ng gastos o financing cost ng isang kumpanya, korporasyon o negosyo. So total retirement price o ang issue price of convertible bonds less the retirement price allocated to the bonds or the fair value of that instrument without equity feature is equals to the equity component. So keep in mind that the carrying value less cash paid to retire bonds is equals to gain or loss on bond retirement. So retirement of non-convertible bonds, on the other hand, is the retirement of bonds prior to date of maturity. So sabi dito, nag-retire na yung bonds bago pa ito mag-mature, hindi na pinatapos. Ganon. And next naman is retirement price is applicable to principal. Carrying amount of bonds on the date of maturity. So difference is recognized as gain or loss on extinguishment of bonds. So kasi dito sinasabi, how much is the retirement price versus magkano na lang yung carrying amount of bonds on date of maturity. And so this will lead to a gain or a loss, and it is presented in P&L or income statement portion of the statement of comprehensive income. So next is retirement of bonds on the date of maturity. Settlement price and carrying amount will be equal to face amount. So meaning, kapag daw equal ang settlement price or SP sa carrying amount or CA, pag same sila din, walang gain or loss na i-recognize. Next is the recognition. The recognition means iaalis or aalisin na natin siya sa financial statement. Okay? So, a financial liability is recognized when it is extinguished. That is when the obligation is discharged or cancelled or expires. A liability is extinguished in many ways. For example, through A. Repayment of cash. B. Transfer of non-cash assets or rendering of services. C. Issuance of equity securities. D. Replacement of the existing obligation with a new obligation. E. Waiver or cancellation by the creditor. And F. Expiration. So to simplify, it means that a financial liability should be removed from the financial statement if and only if it is extinguished. Okay? Na-extinguish ang ating financial liability in many ways, such as kapag binayaran na, convert na into equity, discharge, cancelled, expired, and the likes. So, ayun. So, next naman natin, the recognition procedural approach. So, step 1 is to update the amortization table with relevant and correct information, such as dates and its retirement. Step 2 is to compute for the retirement using this formula. So, retirement price applicable to principal less carrying amount of bonds payable is equals to loss or gain on retirement of bonds payable. Then lastly, for the step 3, record the transaction or its entry as follows. So, debit bonds payable at face amount, debit premium of bonds payable or yung sobra, debit loss on retirement of bonds if applicable, and then credit cash or the retirement price, credit discount on bonds payable if applicable, and gain on retirement of bonds payable credit then if applicable. So yun. So that would be all, and thank you again